In today's video, we're discussing the silver market, which has been quite interesting because we saw that the Perth Mint says they essentially don't have any silver. And we're seeing these very large prices, often towards $40 a silver coin, whereas the price is around 25. So we're moving into this very distorted market. And here to discuss the silver market and silver stocks is Garrett Goggin. He's one of the experts in the world, specifically on silver stocks. And so this is going to be a fascinating subject and topic. So I want to get your price predictions for silver in 2021 in the comments right there down below. We'll ask Garrett that later today. So make sure you hit the like button on this video to send this out to more people. Thanks to our channel sponsor today, Vizsla Silver. And good to see you, Garrett.
Hey, Jake. How you doing?
I'm doing good. I'm excited to talk to you because, you've kind of pulled the layers back on the silver market for many years. And so right now, you see the other day, the Perth Mint saying they don't have any silver. And then we've seen a lot of other reports, bullion dealers getting in trouble for taking orders and then they don't have product. And so the market's in a really weird situation where there seems to be no supply, yet the price isn't reflecting that. What's going on in the silver market right now?
Yeah. Well, I've seen that stuff too just recently. The Perth Mint, they've been, a big supplier of silver and, they hold allocated accounts and they're not selling silver anymore from what I've seen. But, to be honest with you, I write the Silver Stock Analyst. We focus on the silver miners. I've been writing it for, about 10 years. And no matter what the price of silver is, we look for undervalued miners. And we use basically the current price of silver to make our models. But, it's always fun to, talk about, the price of silver and where it's going and stuff. And the thing that I really see that got me excited earlier this year is, the Wall Street Games with GameStop, and then they moved to silver. And then a lot of the people involved, all Wall Street bets, a lot of the people involved are younger because I've been going to conferences, silver stock mining conferences, the big one in Denver Gold Show and the PDAC, the biggest mining show in the world in Toronto. And the average age up there is probably 70 years old at any metals event that you go to. So, the younger people have never been on board. They've been, buying Bitcoin, investing in Tesla, doing stuff like that. But, the game's changing because, these younger millennials are getting on board and they'd rather own silver than hold US dollars. And that's what's going on right now is, there's a tremendous amount of dollars, obviously, in circulation. And people are checking out. That's why Bitcoin's so hot, because people look at stocks. They're like, they're ridiculously overvalued. They look at fixed income. They're like, that's a bubble that's going to burst. And they're going to crypto, and they're going into silver and they're going into gold. And it's going to happen. It happened quickly over a couple days, but it got shut down really quick by the COMEX just selling massive amounts of futures. But, it's continuing. The millennials, the younger generation and everyone else, they're continuing to empty the dealer's inventory out. And it's a process and it's happening and we're watching it happen in front of our eyes right now.
So why silver? You said you've been for the last 10 years focused on silver stocks. Yeah. Why silver? Why not gold or tech or real estate? Why silver?
Well, I tell you what, regarding commodities, when you mention, say copper to people are like, yeah, okay, copper. But you mention gold and silver to people immediately have a reaction. They either love it or they hate it. They're really emotional metals, which makes them very interesting. And now, gold, the gold stocks are volatile. They trade up based off the price of gold. But silver stocks, we look at them as gold on steroids. So silver is more volatile than gold. And then silver stocks, the mining stocks, are more volatile than the gold stocks and even more volatile than silver itself because it's leveraged. You get a cost of mining and then you get the price of silver. The difference is the profits. The profits will go from 10 mil one quarter to 100 mil the next quarter, and the stocks, move up and down tremendously. So, it's extremely volatile sector, and knowing these companies inside and out, I've got a little bit of edge, to pick the right ones.
What is your expectation for silver mining stocks moving forward here in 2021? We're at an interesting position where a lot of people are unsure about, is the stock market going to go up? Is it going to go down? You've seen the 10-year rising, stocks randomly selling off, even silver price. So what's your expectations?
Well, for like silver in general, like you've seen Finding Nemo, right? And you get Dory in there, and Dory's like, just keep swimming, just keep swimming. For all the silver people out there, like just keep stacking, because if you look at all asset prices from 1980 to now, every asset's up. Whatever 2x, 3x, 5x, 10x. Silver is basically the same price as it was in 1980, right? So it's one of the cheapest assets on the planet. Always been a monetary metal. So you keep stacking silver, and we're going to have our day eventually. It always takes longer than what you expect, but it's going to happen. And then silver stocks, their margins are usually less than gold stocks. You get the cost of production, all-in sustaining cost, which is like $13 an ounce. The price of silver is about $24 an ounce. The difference is their margin. Their margins are on par with gold stocks, and this doesn't happen very often. They're making fat profits. They're putting money in the bank. They're starting to pay dividends. They're buying back stock. The silver miners have never been healthier in my 10 years, other than a short period in 2011 where silver spiked up. These companies have never made so much money. And then the average price of silver. You got to look at the average price of silver over 60 business days, because that's a quarter. So they reported quarters, right? Silver price exploded in the third quarter of 2020. It went up like 50%. And we're actually higher than that point. It's at 2650 versus like 2454. So they're going to have another blowout quarter. And if silver stays high, they're going to continue doing well.
How does the industrial demand, or the estimated industrial demand from renewables to tech, et cetera, how does that impact your views on silver moving forward?
Yeah, it's big. I wrote a couple lead articles on the Green New Deal, right, with Biden coming in. And, they want to produce like 500 million solar panels a year or something like that. There's 3/4 of an ounce of silver in each solar panel. And then you get, China, the solar, they want to basically double it or grow it 10x or something like that. It's just massive amounts of silver that they're using. And then, the industrial metals, like the people, some of the younger generation that aren't into silver, they look at mining, they're like, oh, it pollutes and it's bad, and people die and whatever. But you know what? You need all this stuff. Like, look at your cell phone. Your cell phone's got silver in it. Look at your car's got silver in it. But I tell you what, silver is used for mostly like electrical contacts, like the soldering to connect the wire to the circuit board, because silver is the best conductor of electricity out of any element. But it's 10, 20 times more expensive than its peers. So it's expensive. So it's used in small parts, but it's used in technology, and it's used in solar. And, that makes it unique, because gold isn't used for anything really other than jewelry, and central banks buy gold, and they just hold it. But silver has that industrial element that has been growing, and it, more than offsets the supply every year.
How do you think this Green New Deal could impact silver? One thing that I think a lot about is, they just did this stimulus, but it seems like they're probably going to really resort to these infrastructure things, and there's probably going to be a lot of these infrastructure bills. So how does that impact it?
Yeah, I'm there. I'm looking at it. Like the last article I wrote was, talking about, massive inflation ahead. And, it's kind of crazy to think about and talk about, but, Michael Burry, right, from the
Right.
Big Short, like you see his tweets, right, talking about hyperinflation and comparing it to Germany. like 2020 like sent us right over the edge. We're spending 1.9 billion dollars originally, then 1.9 trillion dollars in the second bill. Biden just passed his whatever $2 trillion, and then what you're talking about right now is that new one, the $3 trillion plan. Like, the budget deficit has never been larger. They're selling tremendous amounts of debt. The Fed owns, I think, about 15 or 20% of the Treasury's debt, and they're going to be owning more. The Fed's balance sheet is going to be going through the roof. So this is like a big picture thing where we're looking at just massive spending that is going to continue. It can't stop. You can't taper a Ponzi, right? And then the direct payments to citizens, that people are going to be getting paychecks. They're issuing child credits for thousands and thousands of dollars. And then regarding the political situation, whatever party is going to give you the most freebies and free benefits and spend the most, that's who's going to win the election from now on. This spending is not going to stop. There's no more austerity. There's no more balanced budgets. Those things are a thing of the past. They've totally embraced MMT, the modern monetary theory, the Stephanie Kelton thing where they say deficits don't matter. As long as you print the money, you can print as much as you want. It's insane. And, you need to protect yourself, and you need to buy things, great stores of value like silver, the cheapest thing, the cheapest asset out there since 1980.
So what is your philosophy on investing in silver? Of course, you're known for your specialty in silver mining stocks, but when we look at this broader picture, and what brought me personally to silver is the concerns about the monetary system. I'm not really in the camp where people say, it'll get better. Everyone always thinks it's going to be worse than it is. Everything, come on, everything's fine. I don't see how there isn't some major hiccups over the next few years with the amount of money being printed to GDP and the growing wealth gaps and the social consequences of that. Yep. And so to me, there's two things. There's the physical bullion, and then there's the mining stocks. What is your personal philosophy on that?
Well, you gotta stay diversified. I would, weight a larger portion of your portfolio towards silver stocks. And then, you want to hold some silver. Like we're never going to go down the street and use silver and gold, like in transactions and all that bullshit. But, it is going to go up a tremendous amount in value. So, to own some physical silver and some physical gold, on your possession, and hold it during this time of massive spending and I think massive inflation. A couple years down the road, it's going to do very well. And then you've got your equity portion, and have a portion allocated to silver stocks, and have your portion allocated to gold stocks, and tech stocks, because or whatever you're into, but just stay diversified. And the thing about these mining companies, these silver stocks, they're leveraged to the price of silver. So as the price of silver goes up $1 or $2 or $5, these silver miners' free cash flow explodes. It might double or triple just with a $5 move in the price of silver. So, they're really explosive, as we've seen in the first quarter of this year.
What are your expectations for silver and silver stocks here in 2021?
Yeah. I don't know. I've been expecting, I'm using $30 an ounce to, model prices. It feels like silver kind of lost a lot of momentum, but it's barely down. It made a high at 30 for a day or two, but it's maintained at $26.50 level. I think it's trading a little lower today. But, when it moves really quickly. And, who's to say in a couple of weeks that it can't be up, back at near its highs, it's extremely volatile. And, I think, over this year, 2021, $35 is an easy number to throw out there. But, over the longer term, $100 silver, it makes sense. If you just look at, its value versus other assets and stores of value, it's extremely undervalued. One of the things that I like looking at is I do a regression versus gold from 1970. So you use gold's price to predict the price of silver with all the data points. There's a lot of them. And silver's trading at like a 2. It's basically the gold silver ratio. You just throw a regression on it. But silver is trading at a 2% discount to gold right now. And then major peaks like in 1980 and 2011, silver traded at a 50% premium to gold. Those are the only 2 times that's ever happened. So, I think that's a really good thing to keep your eye on, is its relationship versus gold. You can run a little regression, and when it spikes up really high versus gold again, then we'll probably, it'd be a good time to take some profits off the table.
So where do you anticipate that reverting to versus the previous in, you said 1980 and 2011? Where do you think that type of gold to silver ratio could go?
Oh, I just look at it in terms of the regression. So it becomes like 50% overvalued versus gold. So, as the price of gold continues higher, then that 50% threshold becomes a lot higher for silver. And right now I think it's about $50 or $60 an ounce. But once it starts blowing off to the upside, it could easily move to 100, and then that's using the price of gold right now. And gold sold off along with silver over the past few months, and I wouldn't be surprised to see gold start taking off to the upside at some point. So, but what happens is that the yields start increasing. The Fed doesn't want to get involved for the most part, and yields get to a certain point, the market crashes, then the Fed gets back involved, and they got to bail everything out again. And these things are happening more quickly and more quickly and more quickly. And when that happens again, then they start pushing real yields down, because real yields are the primary driver of gold and precious metal and silver prices. Real yields say that it's interest rates minus inflation. So if you're putting assets in a bank, you're getting 0% return, you're losing whatever, 2%, 3% a year. And we all know inflation's a lot higher than what it is. So once the Fed starts pushing real yields and real yields further back down, gold and silver are going to skyrocket and go to the moon. It's just the amount of spending that's out there. It's going to happen. The Fed's going to have to get back involved at some point, and it's going to push gold and silver higher. And when gold goes higher, silver is going to go higher. And I don't know. I think if you use $2,000 that gets $2,000 for a price of gold, it's going to get silver up close to 100.
So that's a question I've been asking everybody a lot. Their personal opinion on when does the Fed intervene with rates. And so there's the camp that says they won't, basically until there's a major crash. And there's another camp that says, they'll step in sooner than that. Well, what's your expectations?
Yeah, they're not going to do anything unless they have to, and they always wait for the market to tank, and then they jump back in and buy everything up. It's just that's the cycle that they've been on. Just bailing out the stock market. And the stock market could go to 100,000, whichever one you want to use, but it doesn't matter, because a bottle of Coke's probably going to cost $20 at that point.
And what do you think the long-term future looks like? Do you think there's the conversation about essentially a currency reset, and also other people calling for the necessity of a new monetary system? And then you have some of the more interesting characters like the Klaus Schwab and the Davos crowd that has this great reset type of conversation. What is your personal expectations or feelings about where this is headed?
I don't know. I wrote an article on the big reset also, and it's interesting the way things are going, with the way politics are entwined with economics and managing the economy. It's just the government's gotten. They believe that they have to control every part of our life. They believe that they need to control every part of the economy. And it doesn't work that way. Natural systems don't work that way. Natural systems can't grow at 3% a year to infinity, and then the deficits build up to a certain point. then they become, too big to overcome. And then the money is inflated away. Like, I think the budget deficit is the highest it's been since the end of World War II. And we had World War II that we had to pay for. And right now we've got COVID, so they've had to pay for that, but that's no World War II. And then traditionally, the way that it has been solved is through inflation, where, the money that you owe now is going to be worth less in the future, and it's going to be easier to pay off. But I think it just seems like we're at the point where the debt is so high, the spending is not going to stop, that we're going to have major inflation, and the Fed believes that they can control it by raising interest rates. But how can they raise interest rates? The whole mortgage market would absolutely collapse, and real estate's been driving our economy for years. They can't. They keep bluffing that they're going to raise rates. They can't raise rates, because the Fed won't be able to pay back the interest on the debt that they have. So it's inflation. And, to be honest with you, having some debt, in inflation is not necessarily a bad thing, because, you owe whatever, 10,000, 5 years later, it's probably the real value is probably going to be 2,000 if we have bad inflation. So, a little bit of debt and real assets.
So then that begs that there's people saying go to cash right now, then buy whatever after everything's about to crash.
Yeah.
And so do you think that we're headed for the market's been teetering a little and people are saying, well, it's about to happen. What are your expectations or your feelings?
I think cash is like the worst thing to hold, because, there was one book, Michael Burry was quoting it. It wasn't the death of money, but it was about the Weimar hyperinflation. But what was happening was real estate prices were going up so fast, and the stock prices were going up so fast that, brokerages were couldn't keep up, and they were shutting down. And, that's similar to what happened with Robinhood, earlier this year. But people were selling their assets. People were selling their houses, and people were selling their stocks, and they're going, it's too high. And they got, they're holding the Deutschmarks, and they're multimillionaires. And then a year later, they lost everything because the Deutschmark was worth nothing. So I think holding, just currency and cash right now, I think is the wrong thing. And I know there's that whole counter argument, the deflation, inflation thing. And there's guys that have been looking for gold to crash to $800 an ounce. We're going to have a massive deflation and blah, blah, blah. It's not going to happen, because that's why the Fed's there. Because whenever we get to something near that, the Fed pumps as much as they can, and they bail everything out. If there was no Fed involved and they weren't printing money like they were, we probably would have a massive deflationary sell-off. But a massive deflationary sell-off, it can't happen when the Fed's involved.
Do you think that there's a point down the line at which this doesn't work anymore, and we actually get, people say hyperinflation of the US dollar, this isn't Weimar Germany, there's problems here, but you're going way overboard, and they can keep this going? Do you think there's a point at which, I don't think it's tomorrow. I think they're going to have a nice, boom with these infrastructures. That's my personal feelings.
Yeah.
But I don't know, 5 years, 10 years, if it's 30 years even. I mean, maybe it's only 5, but is there a point at which this doesn't work anymore?
Yeah, the amount of debt per GDP used to, have a little bit more debt and used to produce an equal amount of GDP. Now it's diminishing returns. They're producing a tremendous amount of debt. They're not getting any GDP growth. And then, it's interesting when the Fed talks about managing inflation, they talk about inflation expectations, because if people expect inflation to be higher or is going to be high, then people do, crazy things, because, they're protecting themselves from inflation. So the Fed's about managing inflation expectations. It's not about managing inflation, it's about managing inflation expectations. And I tell you what, inflation expectations are creeping up. If you talk to anyone, everyone thinks the price, inflation is here. And then that's the reason why all the millennials are on board. That's why, Wall Street bets. That's why the whole silver squeeze. That's why, they're gaining momentum, because there's a lot of people out there that know that the value of their dollar is being depreciated because they're printing so much, and they want to protect themselves, and they're doing stuff that will do well when there's high inflation. So as far as, managing inflation expectations, the Fed's behind the ball, and we've already taken off to the upside.
I've never heard somebody say that about managing inflation versus inflation expectations. And I thought that was interesting. So is their intention or agenda then to suffocate those expectations a little bit so people don't realize what's happening, or then money velocity doesn't increase? Tell me about that.
You know what that's tied into? If you listen to Powell, he always talks about inflation expectations, not necessarily about inflation, but the whole gold, silver, price fixing conspiracy, right?
Right.
Because when gold and silver take off, like you've been there early in the year, it's like there's no fever like gold fever. So when gold takes off and silver takes off, people really freak out. They think they're losing the value, their currency's becoming worthless. And that's pretty much true. So, the inflation expectations ties into, the whole COMEX debate, whether, all the big banks are colluding in order to keep the gold and silver price low and, all that stuff. And it's tied in. And I think where you see smoke there, you can find fire. Just, the chart of the gold price, like if you bought it at the close of New York and sold it at the open, you'd be up like 200x over the past like 20, 30 years. And then vice versa, if you sold it at New York open and bought it New York close, you would have made another 10 or 20x. Yeah, it's just, I'm a big believer in data and statistics and math, and natural markets don't trade that way.
You said you're a big believer in data, math, and statistics. What do you find the most shocking, interesting, or captivating data, math, or statistics as it pertains to silver and investing in silver? What's most compelling there?
I do like that the chart I just referenced, showing what happens during New York Open versus what happens when the Asian and European markets are open. That's just a outright smoking gun to me. And then I've been watching the commitment of traders pretty closely. I've been watching COMEX inventory, and I've been throwing charts up there on Twitter and stuff like that. But I've been looking. There's many ways you can look at it. There's a lot of guys out there that kind of make big deals out of like nothing, just to like sell subscriptions or whatever. But one thing I do see is that if you look at 20-day deliveries in gold versus every year from 2000 to 2000 to now 2021. The deliveries in gold are like 10x higher than the previous year. And silver was too, but silver had one big delivery a month ago that's kind of fallen off, so it doesn't look as big. But it's the amount of deliveries that are happening on COMEX. And then you see all the crazy stories about bullion dealers where they usually take delivery on COMEX. That's how they get their silver. And then one of the guys on Twitter is like, dude, check out this bar. Like, I've never seen anything like this. It looked like it was like 50 years old. It was like all banged up. It looked like it was the last bar in the vault. You know what I mean? And then, all the stuff that happens with the silver ETF. There's one big warehouse in London where the silver is stored. And then the COMEX uses that as a vault too, in the GLD, in the COMEX, commingle gold bars. And, like I don't necessarily blame it. Like bankers, like when you deposit your money in a bank, that becomes a bank's liability. And the bankers make their money from taking your dollars and loaning it out over and over and over again. Like bankers got a bank. That's how they make their money. What do you think they're doing with gold and silver? Like all this millions and billions and trillions of dollars of, metal just sitting in a warehouse. They're loaning it out like many times over. The whole rehypothecation thing where, is the ounce of gold like in Fort Knox? Yes. Is the ounces of gold in the London vault? Yes. But, who owns them? they're all loaned out like 10, 15, 20, who knows? I think they're loaned out at tremendous times over because, that's how backers make money. So, I find it interesting to follow the, physical delivery stories. It's not going to happen overnight, and it's happening like in front of our eyes. We can see the demand pick up. We can see the Perth Mint run out of silver. The COMEX inventories are declining a little bit. They're still pretty high, but we're seeing a lot of people take physical delivery. It's just a shift in mindset that has to do with inflation expectations, and people are kind of losing faith in our Fed and the politics, and they're protecting themselves, and they're taking delivery of physical silver and physical gold, and it's a smart thing to do.
What is the end game result of this? You're talking about these deliveries, and you painted the picture of the very fragile market. And so in all of your research, what is your personal opinion on the end game of this type of precious metals market?
Well, of the gold and silver, I think COMEX is going to lose its pricing power, over the next few years. The thing about, the gold miners and silver miners, they produce gold, they produce silver, and then they sell it to the refiners, and the refiners are hooked up with the banks, and the banks, provide them, with, all the money in order to, pay the miners, their share of, what they're owed. And the miners need the banks because the miners do a lot of banking deals, they do a lot of debt deals, they do a lot of equity deals. So they're hand in hand, and they don't want to bite the hand that feeds them. So they are relatively content with the way the system is set up now. But I could see in the future, maybe not too far future, where you get players like Sprott, Sprott Money, and they have their PSLV ETF, and that's real money. And Eric Sprott's a real believer. He owns basically 20% of every decent silver company out there, and the PSLV is a great product. Why wouldn't the silver miners? Why wouldn't Sprott, get involved with that whole process and pay the miners, take the banks out of the equation, and be there and pay the miners, for their, metal every month. So I just, I don't see a huge big bang, but I do see the COMEX losing price and power over the next few years.
Very interesting. Very interesting. Yeah, I've never heard someone say that about the relationship with the financial industry, but one thing is for sure, they're definitely, finally after a lot of years starting to have some nice balance sheets, which I'm sure also, their job at the end of the day is to run a business, not to have a huge random price spike in silver. So one final question as we're wrapping up, there's a lot of conversation about China and gold and Russia and gold and Iran and gold. And then there's a lot of conversation about China and rare earth elements that hits the mainstream, battery type of metals. We know that their inventory on uranium is massive. Many estimate that it's at least 400 million pounds, which is double the annual supply in a year. They're kind of a copper. They're probably doing the same thing. One thing you never hear that much about is China and silver. What have you heard on China and silver?
No. Not much, not much, to be honest with you. The gold price, it's been in backwardation, which is unusual. The forward future month is, lower than the current future month. And, that's happening in silver right now. But yeah, you don't hear too much about China and silver right now. Yeah.
I just thought it was interesting that there's everyone says, well, they're getting all this gold and they're going to do their own currency. And the silver's never discussed with China. But then you mentioned earlier about the amount of solar and, there's, it's an interesting one.
Yeah, but I do tell you what, China and Russia, they are diversifying away from holding treasuries, politically, it doesn't seem like things are going very well. the treasury's yield is extremely low. It's basically all risk and no return. And, they are diversifying out of treasuries, and, China and Russia have increased their, gold held by central banks. And, the Chinese are, traditionally very strong buyers and holders of gold, over time. And, yeah, and as these countries, diversify away from treasuries, who's going to be left to buy all this U.S. government debt? Like nobody except for the Federal Reserve. So the Federal Reserve's balance sheet is going to go from 7 trillion to 10 trillion to wherever over the next few years.
That is when it's going to get very interesting. When it hits that point that is just almost hard to comprehend. If we get to a level like that, and you've discussed $100 silver, sometimes I'll put that, if I talk to Keith and Keith's talking about how him and Eric believe $100 silver, and, they firmly believe it. And they're two of the most entrenched guys in the industry. So they've kind of staken their claim on it with their work life. And I get a lot of comments though, people saying that unless you're a real silver bug, people say, oh, it's just clickbait and you're ludicrous. And so I was curious what you say as your thesis for $100 silver, which is a price you've mentioned a couple times today. I posted one not too long ago, maybe it was a couple months ago, and it had $100 silver in the price, and there was a comment that said, well, that's the most ridiculous thing I ever heard. The price is $22. So give me the thesis for it.
I don't understand why it's ridiculous. The price of silver was $50 in 1980. For it to be 2x higher than that, 50 years from then, why is that so ridiculous? It's just silver does what gold does. Silver is gold on steroids. So as the Fed's going to jump in and implement yield curve control at some point and drive real yields lower. Gold's going to start taking off higher and trade, above $2,000. And then the whole movement that we're seeing right now with the millennials and with, Wall Street bets and silver squeeze, they're taking all the physical silver. So this is something different that we've never had these younger people on board before. And they're on board now because, they see, what is happening, with, to the value of their dollars. And I think cryptos help unlock, that whole sector of the market for gold and silver. So, I see the spending continuing. I see debt continuing to grow. I think we're at a limit as far as, it provided any growth to the economy, and then it's just going to come out via inflation, and inflation expectations are going to pick up, and the physical demand is going to continue to be high, and it's even going to get higher. I think silver and gold are going to have a great few years ahead of us.
Does the Fed step in and do yield control this year? Is it 5 years from now?
It depends on the market. I don't know. There's a lot of people speaking today. How's the stock market holding up today? I don't know. I think it's totally contingent upon the market. And I think it's going to happen sooner rather than later because, the treasury yields have been creeping up higher today, and the equity market's going to react negatively at some point, and at that point, the Fed's going to step in. And I think it's sooner rather than
What happens when they do that? I had Greg Manarino on, and he was discussing this subject, and he thinks that when that happens, there's going to be just a humongous rush into the stock market.
Yeah. I think so. Like real assets, whether, it's equities or gold and silver, in the end, gold and silver are going to perform the best, but, equities will, respond very favorably. I think the reason why all these things are going to, explode once the Fed gets back involved more heavily is because we're already at the limits of, the budget. We're already at the limits of spending, and we're at the limits of debt. And this next move that is potentially going to occur is just going to blow it out even wider. And, I think at that point, a lot of people are going to be adding gold and silver, my equities to their portfolio and gold and silver to their portfolio. Gold over the past gold's done great as far as a store of value over the past 20 years. If you look at Berkshire Hathaway versus gold's done better over the past 20 years. And yeah, you're kind of picking time frames here where market was high in 2000, but gold's been a store of value. It doesn't happen overnight, but over the longer term, gold and silver are a great place to protect your assets, and especially in a time like this.
Garrett, thank you for a very interesting conversation. For everyone listening, if you want to see Garrett back on, if there's some questions that I missed, if you want to see Garrett as a returning guest, give us your comments, questions right there down below. Let us know if you enjoyed this video. Make sure you hit the like button on either side. Garrett, where can we find you?
Garrett Goggin, I'm editor of Silver Stock Analyst, and I write for Stansberry Research. So just go to the Stansberry Research website, and you can find me on Twitter too. It's just my name, Garrett Goggin, at Twitter.
Awesome. Everyone, thank you for listening, and make sure that you give us your questions, comments down below, and your silver price prediction for 2021. Do you stand by your price that you made earlier? Would you say $35, $38? Is that what you stand by?
Yeah, 35 is easy. Yep.